Good morning, good afternoon, and welcome to Financing Aviation Decarbonisation and SAF, Striking the Public-Private Sector Balance. Thank you all for joining us today. My name's Roz. I'm the Content Director for Sustainable Aviation Futures MENA Congress. Sustainable Aviation Futures hosts a global series of high-level aviation decarbonisation conferences, bringing together the entire value chain to network, connect, and discuss the capabilities for scaling sustainable solutions to reach net zero by 2050. Over the next 60 minutes, our panel of experts will discuss the role of development banks, commercial banks, and government in supporting SAF, as well as addressing some common barriers to investment, the importance of government policy, and encouraging private sector engagement. This webinar is being held ahead of Sustainable Aviation Futures MENA Congress, hosted in partnership with the UAE General Civil Aviation Authority, and taking place in Abu Dhabi from February 10th to 12th. Today is going to provide a snapshot into some of the topics that will be covered at the MENA Congress, and are covered indeed at all of our congresses, but this event in particular because of the high level of government attendance. The three-day event will see over 800 public and private sector attendees, including global energy and transport ministers, who will come together to drive scaling of SAF and aviation decarbonisation. We're delighted to be holding SAF MENA during the inaugural Global Sustainable Aviation Markets, which is hosted by the GCAA. If you'd like to keep abreast of all of our upcoming events, as well as gain access to exclusive interviews and articles, be sure to subscribe to our monthly newsletter, SAF Spotlight. Finally, before I hand over to today's moderator, there's just a couple of bits of housekeeping. The session is being recorded and it will be distributed to all of you once the webinar finishes. So if anyone has to leave for any reason, don't worry, you won't miss out on the insights shared. There is a Q&A at the bottom of your screen, so please make sure to ask any questions you have in the chat box and we'll do our best to answer as many of them as we can. If you have any technical difficulties, please put those in the chat and I will do my best to help you as well. With that, I'm pleased to hand over to our brilliant moderator, Martin McAspen-Lohman, an independent consultant with a wealth of experience in corporate and investment banking and advising corporates on debt and equity transactions in the new energy infrastructure and commodities sectors. So without further ado, Martin, over to you.
Well, thanks very much, Rose, and good afternoon, or should I say good morning, everyone, and welcome also from me to today's webinar. I'm delighted to moderate this conversation with a fantastic panel. I'm pretty sure who bring invaluable expertise and a great part of the conversation for today. So let me take in a moment a few minutes to set the stage, but before I do that, just picking up on Rose's points on the Q&A, please at any point in time feel free to put questions into the function, into the Q&A function. As Rose was saying, we will pick this up. We will give obviously some time towards the end. At the moment, planning with about 10 to 15 minutes for the Q&A. However, we will see how we are going on with the flow and also how the questions are coming in. And well, I'm pretty sure you will take a lot away from this next hour. So, as I was saying, let me take a few minutes to set the stage, and I will then use the questions also to bring in all three panelists, Wafa, Mariam, and Roberto, and I will introduce them in a moment then to you. So, where are we now? More than 40 carriers have set some form of SAF adoption targets, most aiming for around 10% of their fuel consumption by 2030. While the US and Europe continue to lead the market, other regions are beginning to set out policies, roadmaps, and targets to support domestic SAF adoption. That includes, for example, India, Singapore, and Brazil, as we've seen over the last months. Bloomberg New Energy Finance estimates that demand for SAF is set to reach 3.6% of global jet fuel demand by 2030. There is an assumption that no new policies are enacted in this. And if you take an assumption that there will be additional boosts, if you want, demand could double to more than 7.8% of jet fuel use globally. So despite growing interest and targets from the aviation industry, SAF supply remains scarce and highly concentrated among a few producers. If all come to fruition, SAF capacity could exceed 5.4% of jet fuel demand by 2030. If these plants maximize their SAF yields instead of renewable diesel, this figure could go even higher. And finally, if all planned renewable diesel projects were adopted to maximize SAF production, this annual capacity could reach over 10%. So it looks like there is a really good fit in terms of what we're seeing in terms of demand and supply. So this build out of capacity is predominantly the result of airlines' activities in the US and policy targets in Europe. Europe's overall SAF blend rises to 6%, while North America reaches 5.3% by 2030. Though these regions are clear leaders in terms of SAF adoption, others are also growing. The Asia-Pacific region is currently set to reach a blend of 1.7% by 2030. Given regions including China, Japan, and New Zealand, and well, we're looking forward to hear also what Mariam has to say about the UAE and the Middle East in general, have begun setting roadmaps to boost domestic SAF markets. This figure has the potential to rise significantly. So global supply seems to be on track to meet demand throughout this decade, providing projects materialize on schedule and producers lock in adequate feedstock volumes, both of which remain key uncertainties. So what's holding SAF back? I touched on it. One, feedstock challenges. I'm not going to go into the details now. Most of you will be very well aware of the reliance on heifer, and also that advanced technologies are still probably 5 to 10 years away from large-scale deployment. Second, cost dynamics. Again, you also know only too well how much the costs are above Platts today for SAF. And then the financing constraints, and obviously we're going to touch on this as well. I mean, it is an estimated $1.4 trillion in cumulative investments required by 2050 to meet targets. Well, over the course of this webinar, we will touch on policy landscape, supply chain and production, and we will dive deeper then as part of that in financing of SAF. So let's start. Let's begin with our first topic, policy landscape. And Mariam, I would love to bring the conversation first over to you. And just in case the audience wonders, you have this amazing lighting in the back. This is by far better than my great setup in the office. But I believe you're currently at a trade show, I believe, but you can say in a conference, you can say a few things about that in a moment. But just to introduce Mariam to everyone, you're the Chief Environment Lead at the UAE General Civil Aviation Authority. And in this capacity, I understand you oversee environmental policies and initiatives within the UAE aviation sector. And I also hear that you have been driving the UAE's participation in international frameworks like Clean Skies for Tomorrow, and also the CORSIA initiative as well. So UAE is a critical hub connecting Asia, Africa, and Europe, making it a natural crossroad for global aviation routes. So hence my sort of first question over to you. The UAE has engaged with Clean Skies for Tomorrow to foster collaboration and innovation. How do CST initiatives complement regulatory frameworks like CORSIA in driving SAF adoption and in the UAE? And if you want, you can also expand to this globally. Thank you, Mariam.
Thank you, Martin, for having us, and thank you for the Sustainable Aviation Future for organizing this webinar, just prior to the big event that we will have, as just explained, in February in UAE, in Abu Dhabi, 10 to 12 February, the GSAM, the global, or let's say the GES, the Global Implementation Symposium, which will introduce the GSAM, the Global Sustainable Aviation Fuel Marketplace, along with the SAF MENA Region Conference. So the three big events are happening at the same time, and I think we will have a variety of expertise and organizations and entities here in UAE in Abu Dhabi. And you were wondering where I am sitting now. I'm sitting in the Global Women's Forum, where all these lighting are coming from the stage. I'm hiding somewhere. So going back to UAE's engagement in CORSIA since the beginning, since 2010, when the first climate change resolution was adopted, and then 2013, where we said this, yes, we have to create a global market-based measure. Then we came in 2016 that CORSIA should start as a regulation, as an annex, and UAE was one of those first countries who signed the initial draft of CORSIA. And by 2018, everything was booming, let's say, when it comes to the aviation fuel. And here where we came to say that we need to transition, we need to have a right pathway toward a right clean aviation fuel. And we understood as a UAE, as a big hub, that we cannot just jump to the SAF and kill the sector. So during the CORSIA negotiation, we came to the new definition, which is called CORSIA eligible fuel. And under this definition, we have LCAF, SAF, and other cleaner energy, including the non-drop energy, including the hydrogen and other sources. So UAE is a very balanced state where we are investing heavily in converting and decarbonization of the two sectors, energy sector when it comes to the jet fuel, as well the aviation sector. And because of that, we created a big group since 2010 composed of the aviation and energy. And this team is still continuing the work with us, and we were honored to be selected by Global Economic Forum and UK government in 2000, let's say, let me remember the dates now, 2021, when they were preparing for COP26 in Glasgow. And we were working very closely with the policymaker of the UK and other 5 governments. UAE was selected to be the regional representative for the Clean Skies for Tomorrow. And it was a good intention to have that practice, because we understand that SAF and other cleaner energy will need a policy to drive the whole chain of acceleration the production. So we worked with the number of expertise in drafting the tool of kits of the policy, where all the states can go and adapt what is suitable for them. So all the policies in this toolkit are balanced and well representing different interests of the different states. So this was our contribution to that project, and it has many phases, and we wish that the phase 2 continue in 2023, yeah, but we came with the CAF3. And CAF3 is a Conference of Aviation Alternative Fuels, which also was happening here in Dubai, almost a year, exactly a year from today, So we were part of the global drafting for the future policy or declaration of the aviation fuel. So many policy or drives globally being initiated, adopted, and endorsed. And we are looking now for the second phase, which is execution, not anymore creating more documents from ICAO or from their states. We have done this. We have done the visibility studies. We are part of the many states who's created their roadmaps as well. So we are looking for the right now mechanism to create the execution and the availability of the infrastructure and financial aspects. And this is the pillar number 4 in CAF3 declaration. And I think the GSAM, which is happening in Abu Dhabi, will touch upon this pillar precisely because it was not negotiated in Dubai last year. We negotiated other 3 pillars: the policy, the means of implementation, the regulation, but finance was not touched in details, including the FineVest hub that we endorsed with ICAO. And this area, which we are looking for in February to be touched more and to be, there is more clarity from ICAO Secretariat or ICAO SecJan, for example, when he was announcing that he will announce new announcements in GSAM. So we are looking forward to have more practical execution of the policies that we've been seeing. And UAE will be always part of that policy. And, as you said, this region is a critical region for when it comes to the aviation as a connecting hub. And we need to make sure that there is an availability of the right fuel with the right demand, with the right prices as well. So you have one of the biggest oil producer here. You have Masdar as a SAF investor, and you have our big national carriers, big hub of aviation. So it's a balanced formula, let's say, equation, which we will make the whole journey wise and transitioning as well.
Fantastic. Well, that's a really good comprehensive overview there. I want to play the ball to Wafa now, and Wafa, you are the managing director and head of energy for Americas at ING, the Dutch lender. First of all, great also to have you here. I was just saying that's a relatively early start for you, but I guess we have a few people on the line that are also based in New York, probably, or in other parts also of the US. Now, you have a wealth of experience working in Europe as well as in the US, obviously, specializing structuring deals, funding deals in the infrastructure and energy sectors. Now, Mariam highlighted the UAE's engagement with global frameworks, and I was hoping you can sort of give us that Atlantic view, if you want, between the two sides from your perspective. How do Europe's regulatory approaches, such as ReFuelEU, and the US financial incentives compare in driving SAF demand, and what lessons can stakeholders in each region, but also from other regions, actually learn from sort of the two? Where do you find it easier to structure robust financing packages?
Thank you very much. Thank you for hosting me, and thank you to the organizer of the webinar for having me today. So giving a little bit of background, we're an institution that has financed for the past 20-25 years the deployment of renewable energy at a very large scale. That includes the most, let's say, mainstream today form of renewable energy, that's solar, wind, onshore wind, and now becoming mainstream offshore wind. And so we're looking to make our first few steps in the financing of large-scale new energy projects. So when I say that, I want to be very transparent. We haven't had yet a good first stab at financing a SAF project on this, not even on a big scale or on a small scale, because there are a number of challenges that we hear about by speaking to the industry, to our customers, and that stand in the way of being able to structure those large financing. I want to perhaps just dwell on a few aspects that our clients and in the end our own source of capital find in a way of deploying that finance. That, I want to repeat, has helped bring in the mainstream space technologies that used to be very much, or let's say, that used to face the same cost challenges. I don't want to say perhaps technology, with the exception of offshore because of the scale and turbines, but I want to say that PV back in the day was 500 euros per megawatt hour, which was obviously unaffordable. And so for it to take off the ground, there was a very robust, clear incentive to the projects that were indeed pioneering in the space, under the form of securing the ability to extract a reasonable return on investment. And that support, that decisive support, which I think a number of lessons can be learned from, led to solar being today, with all the intermittency problems that come with it, the cheapest source of electricity on the grid. There remain challenges. It's absolutely not plain sailing for the electricity sector, but you've brought the technology on a cost pathway that's made it a financeable, investable asset class. Now I turn to, well, in this case, sustainable aviation fuel, but this is, by and large applicable to a number of other molecules that are being explored today for the decarbonization of certain hard-to-abate sectors. Aviation is one of them, shipping is one of them, the decarbonization of the uses today of hydrogen. And I want to focus on perhaps a couple more. I think HEFA is one of the, there are several production pathways. Some of them are, tried and tested. Some others have a technological readiness index that is lower, that have not been scaled where certain feedstock problems become apparent. I want to say that, a big part of the de-risking strategy of, I want to say, low-cost capital in order to like banks, commercial banks capital, happens through education. And so it is important for financial institutions, commercial financial institutions, to be as fluent as possibly and it possibly can be on, the realities, which mean that the composition of certain feedstocks makes it problematic for those projects to go from the pilot to the commercial scale size, sort of compromising the availability of supply for demand to pick up. And that compounds with the cost challenges, which mean that actually, and until, in a way, supply is available, it will be impossible or difficult in a way to obtain those CapEx curve gains that come with large-scale deployments and sort of everyone in the supply chain going up the learning curve. I want to talk about. I do want to talk about the offtake. Let's say that a lot of commodities today are not necessarily benefiting from offtake contracts. That does not prevent them from being traded. There comes into play the sort of like the adoption, what stands in the way of adoption by most players, and what's standing in the way is, I believe, or at least we hear from a number of the people that are probably also in the audience, a combination of, well, mandates being possibly still not ambitious enough. Certain technological constraints, whether it's on the feedstock side or on the blending side, and eventually, importantly, the cost parity with incumbent fuels, and basically the let's say lack of carrot or stick or whatever you want to say in order to actually make long-term commitments to offtake those volumes. Perhaps a final point that I want to say is, in structuring those financings, it's not one single layer of capital that is going to solve the challenge. And whereas, commercial banks nowadays represent easily, call it anywhere from 60 to 90% of the capital stack, those early technologies, there has to be sort of, and some of it is on us, on the financial sector, and some of it is also on the sponsor side, to get familiar with the different layers of capital. And so some of them are going to be multilateral, some others are going to be ECA driven, some others are going to be junior debt capital. But I believe there is also another way of sort of honing that capital that will allow the volumes to appear in the market, that will eventually lead to that hopefully virtuous cycle where more volumes drive lower costs, drive more adoption, and drive more finance in the sector.
That's really interesting, Rafa. Thank you. And I've got sort of one follow-up here, but I want to also rope Roberto then into the conversation. So it's a bit probably aimed at both of you. I kindly had Philip 66 giving me a couple of things that I am allowed to quote from their kindly pass this on, which is touching really on sort of that policy environment. And interestingly, Philip 66 says there are still no federal requirements in the US or in the UK to blend SAF into jet fuel, but there's credit support, obviously. And so we're currently producing SAF at Humber and Rodeo, and our expectation is the demand and credit support will grow in the future. Now, specifically to the US and Europe, they're saying the US administration has set 2030 targets of 3 billion gallons, but there is no federal requirement to blend SAF into jet fuel, although federal and also California, Illinois, and I believe Oregon as well, state credits that can be claimed for SAF production. And this incentivizes the production of SAF. In Europe, the government mandates are still under consideration, and it's not clear on the long-term direction, making it investment hardly to justify at current juncture. So that is coming directly from one of the current largest producers of SAF, which I think shows quite nicely sort of that balance. And I guess for anyone literally now looking from a funding perspective, you've got to tighten that up, obviously, as part of that to make projects then financeable. I just wondered, any comments on this, immediate comments from you, Rafa, or from Roberto, before we move on that?
So, I mean, I think definitely the US approach is there is opposition to the imposition of mandates. There is a preference for the market to sort of market dynamics to dictate what will be used and what will be useful for the sector and its efforts to decarbonize. And I believe that while tax credits are indeed support SAF, I think there are some questions about whether it's over the right term in order to generate the investment return on those production plans. I believe that eventually projects are not taking off because people do not want to invest in the asset class and commit and make capital commitments. The reason is it possibly still falls short of what is needed for true investment and for true, let's say, deployment at scale of investment in the sustainable aviation fuel. Wanted to add that there are other mechanisms that are sort of like burgeoning here in the US and also elsewhere in Europe, which is mechanism to aggregate demand in order to sort of hone those coalitions of the willing to aggregate their volumes and sort of provide that visibility over a certain terms. These are still volumes that are modest, but definitely I can see how combining a combination of both of these dynamics on the private sector and on the public sector would lead to more volumes in the future. Now, I guess the question we're all asking ourselves here is like, how fast, and is it fast enough?
Absolutely. Roberto, I absolutely need to come to you now. Just a very brief introduction. You're the principal in climate strategy and delivery at the European Bank for Reconstruction and Development, EBRD. So a development bank. You have an engineering background, so great for looking at new technologies and challenging setups. And you bring a wealth of expertise. So maybe you can sort of catch the ball there from where we just sort of stopped, but also tell us a little bit about these financing opportunities, particularly in regions like Eastern Europe, Central Asia, North Africa, where you are particularly at home.
Sure. I will just continue a little bit on the discussion that before with Wafa. So I think that in Europe, yeah, I mean, the mandates that Europe is used to mandates. Now, the renewable energy directives are based on mandates, and then they need to be translated into the national laws. But if red directive has shown something, is that they will happen and they will be increasing in ambition, all right? So they are long term, and that is something that is opposite to US, that after 2030 and even now you don't know where to go. So that provides some long term perspective, which helps to decide on these projects. So coming back to the price in general, I mean, and a region of operation. So depending on where you are, so if you have mandates, incentives, so you can understand a little bit better the market and go for it. What we're facing now is that you are getting to a point in which investing in HEFA, that is the less technologically risky pathway, is risky from a feedstock supply standpoint of view. So in Europe, you're relying often on imports from China, and that obviously takes a little bit out of, increases the risk because you're exposed to that cost. I mean, HEFA is mainly driven pathway by the cost of the feedstock. So that is on HEFA. But then if you go to the other pathways, maybe the most mature is alcohol to jet, but you only have one plant that is on its way to become fully operational, that is from LanzaJet, Freedom Pines. So you have still a technological risk that is there and makes the projects more difficult to invest in. And then if you go to Power-to-X, still way too early. Gasification, I mean, I have discussed with many people in the past. There are people that believe on it. I have seen it in refineries. I don't believe on it, but well, that is my personal opinion after seeing how difficult it is to operate. But then you touch on the regions that EBRD operates, and they have a potential because either they have local feedstock, so used cooking oil. So for instance, EBRD is present in economies that are quite densely populated, like Egypt, for instance, and then you have a lot of locally sourced used cooking oil, and you don't have still any SAF production facility. So you can imagine a model there in which you produce EFA SAF and then you export to Europe, because you have the market there that after, as you mentioned, after 2030 will start to be quite big. And from 2030 to 2035, it will just explode because we're going from 6% to 20%. That is a massive change in the market size. And anyhow, any project that you start to discuss now will not happen. I mean, it will happen after 2028. So you are close already to a bigger market, a more liquid market. And then that is in countries that can export. And then is what we can drive as MDBs, as institutions. So we all our investments needs to be Paris aligned, and then we invest in all sectors. But so when we invest in companies, we need to drive for decarbonization, for aligning with the objectives of the Paris Agreement. And for instance, in Kazakhstan, we invested in the IPO of Astana, and then with Astana, we set some targets for decarbonization, and some of them is uptake of SAF, and then obviously then we're creating a local market. Okay, so is those two options. So either you have the feedstock, you don't have the mandates, but you can export to a bigger market because you are well connected. If you are not very well connected, but maybe we can set up local targets, that helps. There is then the ambition, as Marian was mentioned, of hubs. So, for instance, another country of operations from EBRD is Turkey. So they also have the ambition of continuing to be an aviation hub, and they are working on developing. So it's a draft regulation for targets for SAF, but there is also a lot of works with the Sustainable Aviation Alliance there that includes many players to develop a roadmap to set targets for SAF. So you have, I mean, it's very varied, and you have two models, big models, US and Europe, but also you have some sort of hybrid models in which there is a drive for SAF.
Super. Yeah, thank you for this, Roberto. And when we sort of already go through that, supply chain, production, demand, and supply issues we touch on, there are a number of questions are coming through also from the audience, and sort of I want to move with that actually over to Mariam in a moment. But I guess what I'm sensing is from those questions, there is a real sort of concern around, well, will there actually be enough supply from 2030 onwards? I was saying at the very beginning that supply and demand, at least for the next few years, will ultimately seem to be coming together quite nicely. But when we make these big steps, as you said, Roberto, then that can look very differently. So there's clearly concerns about it. But I guess I want to connect this part with where is actually the production, where does it ultimately need to go? And I'm hearing, for example, from the Japanese airlines that are obviously looking desperately to get a hand on SAF, but it's not happening at this point in time, for example, in Japan. And one of the tools here is around, for example, the booking claim systems that could be helpful here. Mariam, could I play this question over to you, and then maybe you can give us your thoughts here. Given the UAE's role as we said, the major aviation hub, how can book and claim systems help to overcome potential SAF supply constraints, maybe in certain regions, and ensure accessibility across the region?
Okay, thank you, Martin. And I will emphasize on what been said by Wafa and Roberto on the feedstock issue, because despite the availability of the technology and the investment in this region, we don't have enough feedstock to establish the right demand and supply of the SAF. And we know that this is a concern here in this region because we have a big hub, not just for the UAE, for those who's coming across as well. And as we are exploring the opportunities for feedstock to be exported or imported, sorry, from abroad, we are looking at the book and claim as a second option, because we don't just want to rely on the book and claim. Although we have our experience in the book and claim, one of the big carriers in the UAE has already tested that mechanism by buying SAF from other region and claiming them here on one of our our long flight. So book and claim is a tool to temporary tool, let's say, till we find the right quantity available everywhere. Because as been mentioned now, by 2030, most of the supply is gonna be focused in Europe and United States as well. And this is the studies that we being carried by the IKU's working group for, and it's a concern. So I don't want to promote book and claim today because internationally there is no clarity on the standards, unified standards for the book and claim, and it's very few international organizations that they are doing book and claim. There is an exploration with them. There is a discussion. They came to IKU and they explained the mechanism, but the concern is that does IKU have now it's as a priority to come with the national or international standards for the book and claims so every state can use it. And some of the concerns coming from other states within the region, that is this gonna divert the investment to other regions, or it's just a tool and we still can have investments and serious exploration in this region. So it's a bit very premature to say we will go for book and claim, although there is a lot of discussion between the energy sector as well as the aviation sector that this is one of the right solution for our carriers, and we don't want to ground them anywhere in the world, and we want to be in one of the first who's in compliance with the SAF requirements and decarbonizing the sector as well. Martin, you are mute. Martin, you are mute.
Thank you, Mariam. But Roberto, I saw you unmuted yourself. Did you want to comment on this particular part? Mm-hmm.
Yeah, I mean, so just yeah, book and claim. I mean, we have seen that used for by corporates, but we don't see that happening in a big way. But what we are seeing, yeah, is exports. I mean, in Europe is on the supplier, and there is no book and claim. The supplier needs to supply a certain mandate volume of SAF. So then you physically needs to deliver the quantity of SAF. That doesn't matter if it's produced somewhere else. Needs to comply though with the regulations on the refuel, which are quite strict, particularly in terms of alcohol to jets. So you can only use second generation alcohol, which is very different to what you can use in US, and limits a little bit the availability or a lot the availability of feedstock. So yeah, just that comment.
Perfect. Wafa, did you want to comment on it as well? Otherwise, we'll move.
So I just wanted to. This is just a note, right? I mean, there is obviously for every country there is an agenda of industrialization and some kind of reshoring and some kind of every country wants to use wisely their own taxpayer dollars in order to stimulate their economy, but from sort of like a global perspective, decoupling production and the use of SAF, certainly in an initial period, makes a lot of sense, precisely because of the availability of feedstocks in certain parts of the world and the availability of willing buyers in other parts of the world. So not saying this should be a long-term solution, but definitely that's a solution that would allow some regions to learn and then sort of put those learning available for other players, or just like make their operations of those same domestic player global and international, in order for them to sort of meet those, which is I believe those feedstock challenges and the supply challenges do mean that SAF over ESAF over the future has more potential in spite of its cost, right? Because, well, generally you will find renewable electricity available in certain countries. The south of Europe is particularly rich in those, also the Middle East, and well, biogenic CO2 is something where obviously there are has its own challenges, but I see a lot more, let's say, green shoots on that spectrum of the decarbonization technologies being sort of explored by our clients. And whereas I haven't yet financed the SAF project, we are looking very seriously at several CCUS projects. And that would, let's say, create that supply where a feedstock where it's not available today. And so that's why I believe that, not keeping power to liquids as in a sort of, distant solution for feedstock challenges, it remains one of the avenues and part of why all of the above is necessary to continue to stimulate that future supply and demand.
Yeah, just
Martin, if you allow me, I need to comment on Wafa's last approach when she said that power to liquid. PTL is one of the promising projects even here in this region, and we have the visibility studies for the UAE has been done. But the problem is that the cost is still high to go for the power to liquid. Although we said at the beginning, we talked to the government to have this as a pilot phase of the UAE, the power to liquid. So because of the cost, we didn't start yet the pilot project, but this is one of the testing projects that we want to carry on in this state as well, to advertise it if it's work to the region. So power to liquid, it's yes, one of the future promising, but the cost is very high. And
yeah, and I agree. And Mariam, yeah, indeed. And what I wanted to say is that basically, because hydrogen is sort of like useful for a number of other uses, it doesn't need to be on power to liquid to sort of like go down the learning curve and bring the capex curve down, right? So it's useful for fertilizer, it's useful for directly reduced iron, it's useful for decarbonizing the hydrogen that's being used today. So hopefully that brings some solace in terms of electrolysis cost. And and obviously there's the other giant elephant in the room, which is you need to build a lot more renewable energy for that electricity to be cheap. So it seems like the pieces are there's a lot of pieces that need to move together and in harmony for this to materialize.
Yeah. So just to comment back on that, I mean, in the future in 2050, I mean, the forecast said that half of the SAF will come from eSAF. So that, I mean, it's going to be the major source. However, depending on where you are again, so you have the limitations on the feedstock, is the CO2. So if you need biogenic CO2, that makes the price much more difficult. If on top of that, you add the renewable fuels of non-biological origin regulations, and you need an overly correlation for hydrogen production. So, I mean, the cost keeps just going up and makes it very expensive. However, I mean, ESAF has the biggest potential for cost reduction. HEFA, I don't think that is much potential. So what does that mean is that SAF, I mean, I saw some of the questions from the audience, but SAF will be always more expensive than fossil fuel, unless there is a carbon tax that compensates for that. But if there is no carbon tax enough to bridge the difference, they will be always more expensive. Is the same question is asked in every single green molecule. So is green ammonia going to be cheaper than fossil fuel ammonia? Never. I mean, the only way to do that is carbon taxes. The same for methanol. So, I mean, at the end, or still, if you want anything that you want to decarbonize, but it's going to be more expensive, but it's a different product. It's a green product, and there is a premium to that, and that is what you will need to cope with.
And Roberto, to this point, one of the oil majors who cannot be mentioned here have actually given me some insights around the calculations, and it said basically SAF today probably compares to 3 to up to even $400 per ton CO2, and when you actually put the price on carbon there, and probably power to liquids is probably more closer to $600. So this just sort of compares. No wonder that right now, where we are in the phase of the voluntary phase right now, where people are showing a way of making big commitments at the moment on the SAF side, and rather keep going to the credit market and buy credits and retire those. It's just, in that sense, by far more economical, and to the point of some of those questions. Now, given the time, I want to make sure that we get sort of just a few points also away on, I mean, we touched on a number of financing pieces, but Roberto, whilst you just had you last on, can I ask this question straight away over to you? De-risking tools and basically what you as a development bank have in the toolkit to help funding some of these ventures. Can
Sure.
I
So
to you?
yeah. So I mean, well, the project, a SAF project goes the normal pathway. So you need to de-risk all the elements. And in some of these projects, the biggest ones are in the feedstock supply, in the product offtake, and then in the technology type of risk. But not only, because a lot of the time, so yeah, the majors are doing SAF, the oil majors, but a lot of the time it's not majors, it's different companies. It's a cooperation between, I don't know, a petrochemical company with agribusiness or an airline. So there is much more risk involved in developing these projects than in a classical oil and gas refining type of projects. So for that, to compensate that, we have deployed a first loss cover guarantees with the European Union, and that supports us to invest in these type of projects. It covers our capital and or mobilized funds. It ranges depending on the project, on the location, but it can represent in grant intensity a few percentages grant intensity, which is not a direct grant, but supports a lot the risking of the project first, and then the economics of the project by lowering the interest rates. Okay. So that is what we have been deploying. In projects that we have explored, just to come back to all this discussion about product costs and all this. So there is a lot of interest from oil majors, European oil majors, to offtake SAF. They are being faced with this the dilemma of investing themselves on SAF production or securing offtake. So for some of the projects outside the EU, that they can go through the cheapest route, that is HEFA, then there is what we see is there is a market for the product offtake. So if you secure the feedstock supply and you go with a technology that is proven, so you have highly chances of have a bankable project. But obviously, the offtake of the product is not the fossil fuel price, all right? So just coming to some of the questions that I saw. So it's still much more expensive, but there is a demand for it.
Super.
Perhaps it's useful to sort of like add to what Roberto just said. The characteristics of a good offtake or an offtake that is bankable, I think that there are a number of letters of understanding and memorandums of understanding and generally laying intentions of sort of giving a route to market to the volumes. Some of those that I've had access to were bona fide route to markets with a handling fee that indexed the price of SAF to jet fuel. And when I look at our own commodities trading desk, the liquidity and the depth of the jet fuel A market is not really, doesn't go out in time too long. So I think it comes back to how long, what is the depreciation period of your asset? Is it going to be 3 years? Well, probably not. But then we come back to, okay, so what leverage will that offtake support? Maybe that is a small portion of the leverage that needs then to be complemented by each and every other sources of capital that's available out there. And in the US there are DOE grants, LPO office, and in Europe, EIB, EBRD, export credit agencies are very active in the space and all have sort of come up with domestic tied, untied source of financing. And the fact that you have that cover would also de-risk and bring down the cost of your capital. So actually there is a layer of your capital stack that, let's say, is extremely expensive, because that is the layer that took you from 1,000 gallons to a bigger. That is actually something that is actually, even that financing cost is actually computes towards your availability to secure that lower cost financing. I want to say that in terms of de-risking, I mean, one rule of financing is that, well, the cost of financing is really commensurate with the risk allocation. And so generally it is good advice in order to secure capital to sort of, if you're going to go for a certain feedstock strategy, so let's call it, it's to not stack all the risk on top of one another. And so maybe if you're going for one strategy, one production pathway that you believe is a little bit risky, it is important to sort of have names that are more of a household names or more established names in the material project parties of your project. So having your management team come from other institutions that have a track record, even if your track record is not exactly there, but bringing on board the experience and sort of professional experience from an external CFO or technical office generally will also reflect positively on your ability to raise finance, both the finance that is sort of like equity-like, preferred, and then the finance that sort of like comes from multilateral sources, and eventually at the end of the stack, commercial finance that is able to provide higher leverage ratios, a lower cost of capital, and eventually sort of de-risk that investment. So it's sort of a multi-year pathway to reaching that sort of optimal, let's say, financing structure that's now so mainstream for other asset classes in the decarbonization world.
Yeah.
Sorry, just to comment on that. I think that that is interesting, but it's also what we are exploring one case that is all about, what we see is the spread of the risk, because there is an increase on the complexity of the supply chain on the arrangement, for the project. But if you manage to get on board the feedstock supplier as an investor, the producer that has a good track record, and then the offtake, an airline, then you kind of spread the risks in a way. So you decrease your risk of feedstock supply and pricing. You decrease the risk on your offtake and pricing. And at the end, everyone wins a little bit. And the project itself is more solid. So that is what we're trying also to explore. Obviously, the arrangement and the configuration of the project it gets a little bit more complex. But if it works and they are solid, as Rafa was mentioning, and have a good track record, that could eventually lead to a project that is more bankable and more interesting.
That's great. Can I bring you back in, Mariam, on this? Just give us a perspective on sort of public-private partnerships. Obviously, they're critical also for SAF scale-up, for particular for certain technologies, as we also just heard. But how are you looking at this from a UAE perspective, and how can you sort of leverage on some collaborations? How is this a topic that's being discussed?
Yeah, it is discussed, and I will comment on what Roberto said, that we have to bring all the chain, the different stakeholders on board. And one of the key stakeholders here in the UAE is the oil producer themselves, you know, the refineries that well established in the UAE. And we are lucky that they are the one who's investing in SAF. Actually, they want to be in the market of the SAF. They want to convert from their current jet fuel to the LCAF, lower carbon aviation fuel, then the SAF. So this is one of the critical things that we have, is to move with the oil sector, because people are criticizing the fossil fuel producers and the oil companies, the big oil company. But I can assure in this region, I have two big oil companies are driving the way toward the LCAF as well SAF. So it's not that we continue in the same pattern, but we are exploring with them, and they will be one of the biggest investor in the SAF market as well. And this is what we want to have always, that the big contributor, he's the one who's exploring the solutions. I think there is a noise in the background, so I apologize for that. And despite the time constraint, I think the GSAM that we will have in Abu Dhabi will give us more opportunities to talk on this and have an open dialogue with different supply chain, including the investors and the risk that they can see, because we've been talking to investors here in the UAE many times, and sometimes they will be engaged and they will withdraw because of the return risk that is not guaranteed yet. So this is the reality, and we hope that this dialogue will continue in February with everyone available around.
Fantastic. There's one question, and that's, Wafa, I want to just throw that quickly across, particular to you. How do you see the effect of the incoming US administration on the US market, in particular with respect to the Inflation Reduction Act? It says here also globally, but I guess that's a very US-centric view. Probably too early to say, Wafa. What do you think?
It's I think, relaying statements that were made during the campaign. There is an intention and certainly a willingness to reduce the burden on taxpayers that is directed to solve a climate-driven agenda. And I think what it means is that it possibly means that it will become more challenging from a funding, from a staffing perspective of certain agencies, to just look at the sheer amount of projects that are under consideration in the US. Coming back to the point about the sort of like the really opposition of to mandates in the US from every spectrum of the industry, I believe that bridging the cost of SAF, eSAF, or other production pathway will become more difficult in that context, particularly given that decarbonization will not be, let's say, a priority on the agenda anymore. I do want to say that, for example, when that's just the reality, technologies that are at parity with other, so on the electricity, in the electricity world, right? Those, I believe, are just can be reasonably protected, because they benefit from an employment perspective to so many states, both on both ends of the political spectrum.
Yeah.
Now, how can this help the rest of the world think about SAF? CCUS is something that has a lot of support in the US. And so I do believe that the first project in CCUS that we will see, other than the UK, that just publicly pledged 22 billion for CCUS, are going to be in the US. And that availability of biogenic CO2, with perhaps the ability to decouple production from use geographically, may eventually sort of provide, let's say, an avenue for progress to continue during the next 4 years.
Excellent. Well, thank you for that. We are running, I'm afraid, out of time. We touched on a lot of the questions that the audience had. We probably could have gone on when I look at what we had otherwise also we could have discussed probably on for another hour. But let me just take it from myself. A big thank you to all three of you, Wafa, Roberto, Mariam. Mariam, good luck with the conference, of course. And again, a big thank you to all three of you for the insights slides there. I mean, this is to be continued. I hope that gave a lot of people who dialed into today a good idea, sort of where the topics are and what to touch on. Clearly, there needs to be more time to go into the deepest parts of this to make funding and investment flowing. With this, can I hand over to Rose, because we are running out of time now. So here we go. Rose, over to you. Thank you.
Thank you so much. And I just want to echo what Martin said. Huge thank you to the brilliant panel. That was a really, really interesting discussion. And I think next time I'll get you all back. I'll give you a whole afternoon and we'll hash it all out. Thank you to all of our audience for attending as well. It's been great to have you, and I hope you found this insightful. If you'd like to learn more about everything that's been discussed, make sure that you join us in Abu Dhabi from the 10th to the 12th of February for Sustainable Aviation Futures MENA, GSAM and GISS, and go to www.sustainableaviationfutures.com for full details of all of our events, training courses and SAF Spotlight. Thank you again to our panel. You've been fantastic. Thank you to our attendees and everyone. I hope you have a wonderful rest of your day.